All right, so what I'm going to talk about tonight is first, I want to give some money away. So I've seen Morgan do this before, and I know that people really like it. I've never tried it before, so um, I probably won't be able to keep track of the winner. So a little trivia. I learned this trick from my buddy Morgan. So I'm gonna give away $50 for the right answer. He has to be the first right answer, though. Okay. So in the movie Wall Street, Money Never Sleeps. What bubble was Gordon Gekko talking about being the largest, craziest bubble? First answer with the right answer gets $50. Oh, so Guy K. All right, Guy K got it. Guyk. So keep a track of this for me, Susanna, if you don't mind. All right, so that's tulips. All right, way to go, way to go. All right, so send us an email there, and we'll take care of you there. We'll send you PayPal $50. Second question on the Wolf of Wall Street. What person did Leonardo DiCaprio play? Who did he play? What was the guy's first and last name? His real name? The Wolf on Wall Street. Hey, Stephen Inns, got it. Jordan Belfort. That's correct. That's correct. All right. All right. So third and final question. Third and final question. In the movie Trading Places, Eddie Murphy made his money in what market? In what market did Eddie Murphy make his money? Oh, there you go. OJ. OJ. Who was it? Vince. We got it. Vince. OJ. Very nice. Very nice. Great job. Great job. Orange juice. That's right. All right. So we'll send you $50 to all the first, pays to be a winner, first place winners. All right. So let's get started. So I'm going to be talking tonight about how to risk $156 to potentially make $1,000. Somebody said frozen. That's funny. So let me make sure that everything's working here. There we go. So before I start, I have to do a warning. I have a soul and I like to sleep at night. Is the number one reason I do this. Number two reason I do it is because I'm registered. I don't want to go to jail. And I don't think me and Bubba would do well in a state penitentiary, so I'm going to read the disclaimer. Heads up, you will probably, in most likely cases, lose all of your money trading. Does everybody understand? This is for big boys and big girls. You never trade with more money than you can discretionary afford to lose. It's dangerous to your wealth if you don't know what you're doing, and if you do know what you're doing, you can still, lose all your money. Does everybody understand? We're all in the same place. Everybody understands how dangerous this is. Hard to do. You probably won't make any money. You'll probably lose a lot. You ever give me a visual? Yes. So I'm covered by compliance here. All right. Now that we've got that out of the way, and I like to actually go a little bit further and go, the warning disclaimer is it's kind of like a bad country song. Your wife's going to leave you, your kids are going to hate you, your dog's going to die, and they're going to take up your pickup. They're going to take your pickup truck. So heads up, you're probably going to lose a lot of money just trying to figure out how to do this. So my name is Hubert Centers, and this is my no BS approach to trading and investing. And after I did the disclaimer, this is what I actually believe. I actually believe that if you get around other successful people that are doing what you want to do, I believe that it'll rub off on you. Now, I don't just believe magically you will know how to do it. If you put in the work and you ask your mentors what they're doing, how they're doing it, they'll give you some advice. You go take some action, and then you come back, you report to them and say, all right, this is what worked, this didn't work. Okay, now try this. Okay, now you're doing that wrong, adjust this. So that's my personal belief. So even disclaimer for both moral, ethical, and legal reasons, I still believe if you really work really hard at it, you can do just about anything that you set your mind to. So this is a picture of Paula Abdul, and she's actually a little shorter than that. She's in 6-inch heels. This is Sir Richard Branson. I do some stuff with his charity work and stuff like that, and help him out on those things. And you look in here, 1, 2, 3 chins, and I'm probably just like everybody else. New Year's resolution: I'm trying to lose some weight and get healthy. So I've got a trainer that comes here 3 days a week and kicks our rear ends. This is where I trade. We affectionately call it the Bat Cave. There are 6 LCD 24-inch machines, and I'm probably surrounded by another 20 or so from people that work here on the team. This microphone is the microphone I'm speaking in now. I do not wear a suit and tie. Right now, I have a pair of jeans on and a T-shirt because I trade at my home office, which is a small 1,500 square office built with a secret bookcase into it. So you have to hit a button and come into the office, and then it opens up and stuff. And when I grew up in a middle to poor part of the state in eastern Kentucky, and I always said this, like I always watched a lot of Scooby-Doo and Ghost of Mr. Chicken. I was like, if I ever make enough money, I'm going to have like secret passageways and doors and stuff in my house. So, fortunately, I've made enough money where I kind of have a couple. I think I have like 3 or 4 in the house, secret doorways and passageways and stuff. And I know it's silly and it's immature, but I don't really care. I kind of like it and I think it's cool. So that's kind of how I've got the house laid out. So this webinar is going to be a little bit different, but in a good way. I am on a timer. If I can see the timer, I would know how much time I have left. I just don't know. But I think I'm supposed to be off here at I believe it's 9. Is that right? 9:30. So 9:30. All right. So let's get started. So first, before we start, I'm going to be talking about futures. Okay. This is number one. I trade a lot of futures, and number two, I don't really know if you what do you trade in here? Do you trade stocks, options, futures? What do you trade? Like, I don't know what everyone in here physically trades. Do you trade stocks, options, futures, forex, binaries? You know, what all do you trade? So this discussion is actually going to be about futures, okay? So there's a couple advantages, in my opinion. Everybody should have at least a small futures account because all exchanges go down. So if you only trade stocks, let's say you only trade Apple, if the NASDAQ goes down, then you're screwed. And that you can't trade them overnight, so if it gaps up or gaps down, you get screwed. So I'm not saying just put all your money in a futures account, but everybody that trades should have a small futures account so that you can hedge. So let's say that this happens. Let's say that you're long AAPL, okay? And you're long Apple, so you're betting on it going up. And then just out of nowhere, the NASDAQ exchange just stops working, okay? When the NASDAQ stops working, let's just say at this point right here, NASDAQ just stopped working, the NQ, the exchange, stopped working. NASDAQ went down, NASDAQ. Well, if that happens and you don't have a futures account, as long as the futures markets are still going up because they're on the CME exchange instead of the NASDAQ exchange, then you'll be okay in your Apple trade in most cases. Now, let's say you're long Apple and the exchange goes right here, and about the time that the exchange goes down, the NASDAQ futures start tanking too. What's going to happen to your Apple position in most likelihood, if you think about it? Which way is it going to go? It's going to go down, right? So what you do is you hedge in a small futures account, and you just short some NASDAQ futures, and you'd say, okay, I need to short a handful of NASDAQ futures to hedge against my Apple risk. And then also, like, if you're long Apple overnight and you can see that it's gapping up or gapping down, or if the futures are moving one way, it's a great way to hedge stocks and options trade. So, and small could be anything. It could be as low as 3,000 to 5,000. It could be 15,000. It could be 30,000. Depends on how big your portfolio is. So congratulations, you're in the right place at the right time. Let's do some quick math. So I want to show you that first, futures are highly leveraged and they can be dangerous. But if you use tight stop losses and really good setups, I believe they're a really, really powerful instrument, and that's why I trade a lot of them. So I'm going to teach you a trade tonight. I'm actually going to teach you 2 trades as long as I can get through the material, and I'll try to get to it as fast as I can. I'm not going to hold anything back. If you have any questions, if you don't mind, just hold them till the end, and I'll get to every single one of them that I can with the time allotted. So if I could teach you a trade where you could risk $156 to potentially make $1,000, would you be interested in that? Yes. So 2 people. So everybody else in here hates money. Is that the correct answer? There we go. So it's a little delayed. I got it. All right. Now, so the question to the answer is yes. All right. Now, if I could show you a trade where it depends, right? If I could show you something that risked $156 to potentially make $1,000, and you said yes, how many days of the week would you do that trade? How many days of the week? So the answer is every day that ends in Y. Okay. So let's do some math. So here's the bad news, and I'm going to have go ahead and just get the elephant out of the room. This trade sucks. The percentage of it just sucks so bad. It only works 41% of the time. Okay. So with this math, what we're going to go through is we're going to say, let's say we're going to pretend we're going to do 10 trades. Okay. We're going to pretend that we're doing 10 trades, and they're going to kind of go in a sequence that makes sense, which never happens. But let's go through this. So we're going to have 6 losing trades out of 10. So if we lose 6 times 156, then we're going to net lose $963. So out of 10 trades, we're going to have 6 losers and only 4 winners. On the next string of winners, we're going to have 4 profitable trades, and we're going to make $1,000, even in the big city of, and this is kind of weird, where I live is pronounced, if you're from the local area, they say Versailles. Everywhere else in the world, it's pronounced Versailles. I don't know why, but I guess that's just how rednecks do things in Kentucky. So you would make $4,000. So what does that come out to P&L wise? That comes out to $3,064. Now, you're not going to do this every day. I'm talking about a string of 10 trades. So even though it happens only 41% of the time, you have the potential to net make $3,000. Now, let's say it's worse, because sometimes it is. Let's say it only works 30% of the time. And now you're sitting there going, man, I thought all you professional traders were just hugely accurate. Most of my trades fall anywhere from 38% to 48% on the probability of whether it's going to hit a good string of wins or a good string of losers. The thing is, I'm always trying to make a lot more than I'm actually risking, so that's how it pays off. So let's say we had 7 losers. 7 losers times 156 is going to be $1,092. And then 3 winners times 1,000 is going to be $3,000. And then what we're going to do is we're going to tally that up, and it comes to 1908. Does everybody understand? Everybody got the basic math? All right, so let's go through the stages that you're going to go through. And there's different levels of trader, and the levels are different from everybody. So just informally, I don't have a survey set up, but where are you at right now? Are you level 1, where you have learned how to lose massive amounts of money? That's always a fun time. Or are you at stage or level 2, where you learn how to lose little amounts of money, right? Because now you're just tired of bleeding to death, so now you're starting to lose just a little bit amount of money. Or are you treading water? And treading water means you make a little, you lose a little, or you make a lot and then you lose a lot where you're treading water. This is where most people fall, is level 3. And level 4, you're starting to make some consistent income. And there's certain things that you can go from level 3 to level 4 if you just follow, that makes it a little bit easier. Or are you at level 5 making a consistent killing? And I don't know what that is to you, and that's why I have it asterisk. So looks like a lot of people are at stage 3, so that's good. This strategy is actually designed to actually take you from stage 3 to stage 4, because what it does is it allows you to hold a winner longer and cut the losers loose. Now, also, just for my notes here, there's 3 different styles of types of traders, and they kind of go like this. And hopefully you're not C, but do you do things like this? Do you have big losers followed by a little streak of winners, okay, and then followed by a huge loss, followed by a little bit of gain? Style A, okay? Or are you style A, where you have a huge winner followed by a string of losses? This is how I trade right here. And sometimes the string of losses get out of hand sometimes. And then you have a huge win and then a bunch of little losses. This is style B. Or are you style C, where you have big, huge losses and little itty-bitty gains? Now, number 1, or strategy A, usually happens because you had a big loss, and then just as soon as you get a little profit, you want to take it really quick. That's the reason why most people suffer from A. They're like, oh my God, it's a big loss. Okay, I'm in a trade. Take some profits. Take my $300. I know I just lost $4,000, but take the $300. So if you can, try to focus on B. It'll make you a little bit more profitable. It's not the easiest strategy in the world. You have to have really good money management and risk control. So in other words, your trades they don't have to be super, super accurate, but your risk to reward ratio has to be positive. All right, let's move on to the next slide. So I want to tell you a quick fable, all right? Aesop's fable called The Scorpion and the Frog. Has anybody ever heard The Scorpion and the Frog? So the story goes like this. There's a scorpion, and he asked the frog for a ride across this stream. And the frog goes, well, no, I'm not going to do that, because I'm in the back, and I'm going to die, and you're going to eat me. And he goes, no, really, I want to go to the other side of the stream, and I can't get there by myself. If you do me a solid, let me catch a ride, and then when I get over there, I've got better hunting grounds. For whatever reason, the frog lets him do it. And as they're getting halfway across the stream, the scorpion stings the frog in the back, and the frog goes, why did you do that? And the scorpion goes, I guess it's just in my nature. So if you're getting beat up in a certain market, it may not be your fault. You're probably just trading the wrong thing. So what we're going to go through is we're going to go through, like, what is the best way or the best market to trade. And there's a couple of easy ways to do that. So you probably did what everybody else did. You said, "Hey, what's the best thing to trade?" And you started asking people, and a lot of people would tell you like, "Oh, you should trade the S&P minis. It's the thickest market out there. Everybody trades it." And then what happens is, it's got the most volume. Everybody trades it, and you go, "Okay, all right, I'll try that." And then when you traded it, what happened to you? What happened to you when you traded the S&P mini? Did you get chopped up? Did you make a lot of money? About the time you figured it out, did it go the opposite direction? Lost money? So then you trade them. You get chopped up. You start asking the questions like, man, what's wrong with this? Why can't I do it? I'm smart. I'm successful. But this is just too hard. And then you'll say, it's got to be rigged. It's not rigged. It's just the nature of the S&P goes like this. Run, stop, reverse, run, stop, reverse, run, stop, reverse. All right, I'm breaking away. Oh, sorry, sucker. Run, stop, reverse, run, stop, reverse, run, stop, reverse. Anybody experience this? I know I'm not the only one, and I still trade a lot of E-minis. And I have a seat on the Chicago Board of Trade, so I get professional rates because I have a seat. But they're still not the easiest thing in the world to trade because they don't do well with breakouts. Now, we have had one heck of a run, but they're not the best thing in the world for breakouts. So that may have happened to you. So you've been betrayed. People have lied to you, but it's not your fault. You've been lied to. And you're probably going, okay, who lied to me? Who are they? They are other traders, the media, other investors, and it's passed down from generation to generation. Did you test what they told you, or did you just trust them and believe that you should trade the S&P minis? Did you do any back testing? Do you know what strategy, what personality type fits that market? So that type is really, really good. You probably trusted it, but you probably just didn't verify it. What happens is on that, if you're trading a market that does not match your personality or your trading style, it's just painful and it's just really, really frustrating. It's like you could do the right thing at the wrong time and it still sucks, right? So if you do the right thing at the wrong time, you're still going to get pain associated with your trades. So true or false, if you can trade any market. Do you believe this statement to be true? True or false? If you can trade any market. I would say maybe, right? I would say it's true to a point, true but. And every time somebody says something with a but, you're going, okay, here comes the punchline. But it's a lot easier to trade something that matches your trading style and your personality. So if you're a breakout trader, E-minis are not your friend. Neither is crude oil. But gold and bonds and currency futures and agriculture futures will be because that's how they act. Okay? If you don't match your trading style to the right market, it's going to be very painful and very frustrating. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. Okay? Psychology makes it impossible. Yeah. All right, so think about this statement. What's wrong with trading better faster? Is there anything wrong with trading better faster? Now, I'm not giving you any pie in the sky, and I'm not here to blow smoke up your ear, but there are things that you can do that will just make you trade better faster. And I'm not saying there is no short-term secret to long-term success, but there are some tricks of the trade that you can learn to go, oh, I don't want to trade that. Why? It's just, if you didn't like chocolate ice cream, and I say, hey, you want some chocolate ice cream? No, I don't want any. Well, I just don't like it. So if you're trading something that doesn't really match kind of how you're wired up, get out of that and trade something else. And it's going to make a huge difference, all right? So let's talk about how to pick a market to trade that's going to suit your personality better. So I am going to assume that most of you are trend traders that like to either buy breakouts or buy pullbacks. This system here is not really designed to be a counter trend trading system, but I'll show you things on here that will be good. It's not alive. Yeah, it's not alive. So let's take a look at the Dow. So I'm going to go through and show you what these things are. So first what you're going to do is when you're looking at something, compare the ATR, which is just the average true range. And the average true range just means how wide is this thing from the low to the high or from the high to the low. So the Dow moves about 93 points. It's multiplied times $5, so you can make or lose $465 a day. The problem with that is this thing acts like this. Run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. That's just its nature. It suits itself well to counter trend trading. Same thing with the S&P. It goes run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. Moves about 10 points in a day times $50. You can make or lose $515 if you got some mad skills. The NASDAQ, same thing, moves 25 points times $20. You can make or lose $518. All right. And then from here, run, stop, reverse, run, stop, reverse, run, stop, reverse. Russell is a little bit more exaggerated. It's going to be run, stop, reverse, run, stop, reverse. And then it's going to be breakaway, and then run, stop, reverse, and then run, stop, reverse. Moves about 10 points times $100 is going to be $990. Okay. The bond market, the 30-year bond, goes like this. It goes up, pulls back, up, pulls back, up, pulls back, and then it goes up one more time, and then it pulls back about half of its range. Moves about a point and a quarter. It's worth $1,000 a point. You can make or lose $11.50. And that's what I'm going to talk about tonight. Is I'm going to talk about the 30-year bond market. Okay, crude oil is a little crazy. It's kind of like a chihuahua on amphetamines. It'll love you one second and hate you the next. But you can make a lot of money, but you got to be careful just because it's a little herky-jerky sometimes. The silver market is very dangerous. Stay away from silver. You can make or lose $25,000 to $50,000 in this thing if you're on the wrong side. Just be careful. Gold's another market that works really good. It goes like this. It goes run, consolidate, run, consolidate, run, consolidate, and then back adjust. So for sakes of trend traders that like to buy breakouts, the 30-year bond's good, gold is good, and in some cases the currencies are really good. So what I'm going to do is I'm going to teach you how to trade bonds tonight. Now, did anybody hear about this little thing about the federal government? They're going to start doing this magical thing called tapering, where they have been buying just enormous amounts of bonds, and now they're going to start tapering. So I'm just curious, lies, right? I'm just curious, what do you think is, if they stop tapering, what will happen to the bond market? What do you think will happen if they stop tapering? Do you think the bond market will continue to go higher? Or do you think the bond market will continue to go lower? Okay. So yeah, the bond market's probably going to drop. Okay. It's going to trade a little bit sideways just to see if they're actually going to do what they say they're going to do. But there's some key levels I'm going to show you, and a couple of little secret little trades that you can do to kind of just print off some cash of your own, like the federal government is doing to us all, right? So this is going to be like how to hold a winner for a longer portion of time. So I'm going to go through bond basics. And I'm just going to teach you really quickly how to trade bonds, okay? So this is not like a note or a CD. When you say the bond market, a lot of people freak out. They're like, oh, my God, like bonds, like my grandfather or my mother or grandmother has a bond in a safe deposit box. No. This is just a bond futures, a 30-year bond future. It trades just like the E-minis. So I'm going to talk about the months, the time, cautionary things you need to be aware of. I'm going to talk about tick values, talk about DOM, and I'm going to talk about margins. And then we're going to go through a couple of trades that I'm going to show you. And these are two of my favorite trades in the bond market. So first off, there's a bunch of different futures markets, and I don't know who set up the bond lettering system, but it needs to be shot because it makes no sense. The ones that you need to be aware of is H, M, U, and Z. It trades just like the E-minis. How many people in here trade the E-minis? Dow, S&P, NASDAQ, Russell. So it trades just like those. No difference whatsoever. It's the same months. It's going to be March, June, Sep, and Dece. Okay? So those are the months it's going to trade. If you haven't traded futures before, open up a futures account. It's not that hard. It's just, it sounds a little weird when you start thinking about trading the future. All right. So those are the months that you're going to worry about. H, M, U, Z. H is March, M is June, U is Sep, and Z is December. So here's how it works. So right now we're trading US M14, okay? And when we started trading that was in the second week in December, okay? Second week in December, we started trading the March contract. Now, when we get to the second week in March, we will start to trade June. When we get in the second week of June, we will then start trading September. And then when we get in the second week of September, we will then start trading December. And how the symbol works is like this. So you'd say US H14, and then you'd say US M14, and then you'd say US U14, and then you'd go US Z14. So it's pretty simple to do, not hard at all. Every platform's a little bit different. US H14, yep. So let's take a look at, here's how they work. So the times that the bond market opens is from 6 p.m. till 5 p.m. So how how long are they open for? Are they open for 60 minutes or are they open for 23 hours? Are they open for 60 minutes or 23 hours? Correct answer is 23 hours. That's right. Open outcry, when the guys in the pit trade them the most, is from 8:20 a.m. to 3 o'clock p.m. East Coast time. So this is one of the powerful things. They're open 23 hours a day. You can actually be in a trade for 23 hours and not have to pay a lot of overnight margin if you know what you're doing. So here's how these things work. The symbol for TradeStation is at US, or you can just do the USH14. You can see that they're very thick. All right, so that's the 30-year. This is the 10-year Treasury note. We're going to talk about the 30-year. You can see they open up at 6 o'clock. They close at 5. It's $1,000 a point, and it moves in 30 seconds. So, this is the hard part. If you don't pay attention to anything else I say, pay attention to this because this is where it gets a little sketchy. All right. So a minimum move is going to make or lose you $31. All right. So cautionary things, you need to pay attention to interest rates and other major economic news like the FOMC. We'll move them around. The calendar that I like to use for that is a con a day. Now, if you take a look, this is how the tick values work. So I'm going to skip to a slide that makes a lot more sense because you don't need that information right there. It's for something else. Here you go. This is the slide where you got to pay attention. So if you're not paying attention, look at the screen right now. If you've never traded bonds, this will make everything super, super simple for you. So we're going to pretend that you got long at 135. Okay, does everybody see me circling 135? We're going to pretend you got long at 135. If it goes to 135 and it moves up one tick, from 135 to 135 and 132nd, how much money do you make? If you got long at 135 and it went up to 135 and 132nd. So these things trade in fractions. It's the only confusing point. So, yep, you would make $31.25. Obviously, if you had been short, you'd have lost that money. So usually, how much do the bond market move in a day? You remember from the average true range chart? They move about 1.15 points a day. Okay. So if you got long from 135 and you went all the way up here to 136, here's how they trade. You'd be like, all right, I'm long at 135. It's trading now at 135, 28, 30 seconds, 29, 30 seconds, 135, 30 seconds, 135 and 31, 30 seconds, and then 135 and 32, 30 seconds is 136. How much money would you make if it moved a full point in one day? From 135 to 136. Nope, you'd make not 250. You'd make a full $1,000. So we're going to talk about how you can do that, and it's not that hard if you get situated and in the right trade. All right. So one thing that you need to know is this is what happens to the bond market. So the first thing you're going to do is you're going to figure out on the daily market, is the trend up or is the trend down? And what we're going to talk about is this little trade called a 8, 12, or 16 tick reversal. So it's going to be an 8, 12, or 16 tick reversal. Okay. So just keep that in mind. I'll show you how that works in just a second. So here's how it works on different platforms. On TradeStation, they go 135 and 31 32nd, 132. And then on other platforms, like Infinity, they'll go 133.12. That just means 0.12 30 seconds, 13 30 seconds, 14 30 seconds. Does that make sense? So different platforms will do it slightly different way. All right. So you don't have to be too timid or too cautionary. If you know what you're doing, it really doesn't matter what platform you're trading on. So we're going to talk about margins and intraday margins really quickly, and then I'm going to teach you the two trades that I came here to teach you. And then we'll have plenty of time for Q&A. So first, call your broker. The commission structure for bonds is very, very inexpensive. They can be as low as $300 to $1,000. Most people will give you $500 intraday margin, but be careful. They're already leveraged, so you got to be careful. So on the 30-year, overnight, it's going to cost you about $3,000 to have in your account. But overnight margin will be about $3,000. Intraday margin can be as low as $500. So I'm going to give you a couple of quizzes here. If you're in the bond market at 9:30 in the morning and you hold it until 4:30 p.m., is that intraday or overnight margin? Intraday or overnight margin? And this is AM. Intraday. All right, so you're going to be charged $500 to hold on to that trade for that long. Now let's say you go from 9:30 to When did the bond market close? When did they close? Let's say you hold it until 5:10. Is that overnight or intraday? So, starts with an O, overnight. All right, overnight trade. Now let's say that you opened up and at 6:10 p.m. you placed a trade and you stayed in it until 4:45 the next day. Is that intraday or overnight? That's right. In most brokerage firms, that's calculated as intraday. So you can see how powerful this could be, because you could hold on to this thing for almost 23 hours, and it gives you the ability to let's see if the bond market, I'm going to adjust my chair here for a minute. It's going to let you see if the bond market's going to have the ability to run for you or against you. All right. So let's go to the next slide. So here are the rules. Now, I will tell you, I only do the 8 tick or the 16 tick. I hardly ever do the 12 tick, okay? So 8 tick or 16 tick. Yeah, some brokers will not do it. Some brokers like Toss will not recognize that, but a lot of others will. So the first thing you're going to do is this right here, and I've got a chart. A picture's worth 1,000 words, so let's just do it this way. Here's how this trade works. Before we do the trade, let's go back through the math. If it works 4 times out of 10, we're going to make about $3,000. If it works 3 times out of 10, we're going to make a little over $1,000. Okay. So does anybody know what this right here is? When you short something here and you cover it here, does anybody know what that's called? That's called what? When you short something here and cover it higher, what is that called? That's called a loss. You are trading, and if you've never experienced one, well, you just haven't been trading long enough. So that's a loser, and I lost $156. Now here's the second loser, where I shorted it here, and I got stopped out here for another 156. Okay. Now the key to this is being able to take a little bit of pain. Here's the third trade that I did. This is the overnight position. So in other words, this is the 6 p.m. where the bond market opened up again. So I shorted it here, and I did not get stopped out. And then if you short something here and you cover it here, what's this called? And I will give you a little tip. I look at these as deposits into the market that I will withdraw at a later date. So this is a win, okay? And on this trade, I made $1,000, okay? With the same strategy I'm about to teach you. So what is $1,000 minus 156 minus 156? Does anybody know? I don't have a calculator handy. Somebody do the math for me real quick. 1,000 minus 156 minus 156. So 680, 690, 687, 688. So there you go. So 788, 12, lots of different answers. So on your free time, you can calculate that up. It's not terrible. It's definitely not 312. Oh, add it up, yeah. So here's the first rules, okay? So on the first rules, it's 688. So on the first rules, all right, what about the margin cost? The margin cost on that trade was intraday margin for me. So the first rule for this trade is you first want to know what the daily trend is, okay? What the daily trend is. That's rule number 2, or rule number 1. Rule number 2 is you're only going to trade in that direction. And then you're going to let it bounce or retrace either 8 ticks, 12 ticks, or 16 ticks. 16, 8, 12, 8, 12, and 16. I never do the 12. I know some people that do, but what I do is I either do the 8 or I do the 16. The reason being is if I get stopped out at the 8, that is 12 ticks. So I either, if we're at half an average true range, I'll focus on the 8 tick. If we're at a full ATR, then I'll focus on the 16 tick. So for this example, we've got the bonds going parabolic straight up. You see where they broke this trend line? So can we all agree that the market is in a downtrend on this example for teaching purposes? So would you say that's a downtrend now that we broke that up trend line? So that's the first rule. All right. Now, we have a nice little sell-off on the daily. So we just want to focus on the short side for this example. So you can see a sell-off during the day. And then what you're going to do is on the 6 p.m. open, I usually start looking at this about 7 p.m., then you're going to start marking a low. All right, there's a low. And then what you're going to do is on these lows in the overnight session, you want them to bounce up 8 ticks. So from this low, it bounces up 8 ticks, and I'm just going to short it right there. And I'm going to use a 5-tick stop loss, which is $156.25. And my target is going to be 32 ticks, which is 1 full point, which is $1,000. Okay? If I'm wrong, I'm going to lose 156. If I'm right, I'm going to make $1,000. Anybody have any questions on this setup yet? I think I've got another slide. Here's another example. The daily is in a downtrend. The market opens up at 6 in the evening again. And then I'm going, okay, it's in a daily downtrend. What I want it to do is I want it to go a little bit lower for me. And then this was my low. If it bounces up 8 ticks, I'm going to short it. All right, I didn't get an 8-tick short there. All right, now it makes another new low right here. That's a low. And what I want to do is I want to put my order, if that's 146 for 30 seconds, 4 plus 8 is 12. So I'm going to place my sell order at 146, 12, 30 seconds with a 5-tick stop loss and a 32-tick target. That's as simple as it gets. What trigger made you go short? An 8-tick bounce is what the trigger I used. Super simple, right? So if you can count just 8 ticks, 12 ticks, or 16 ticks, and the ones that I prefer is an 8 or a 16 tick, you can do this trade. It's super easy. It doesn't require any special indicators. It's if you can do simple math, you can do this trade. So any questions on the first trade? So here you can see I woke up the next day, and then I started bumping the stop down a little bit, trailing it, and then 2 seconds later, I made my $1,000. Why 16 then? Why 16 then? So this is why this trade works. So if I can get me a little slot here. All right. So the bond market works like this. If the bonds, they'll go down, and then they'll retrace either 8 ticks, and then they'll continue lower, or they'll go down, and they'll either retrace 12 ticks and then go lower, or they'll go lower, and then they'll retrace 16 ticks. That's just the nature of them. Remember what we were talking about earlier in the webinar? Like you got to know the personality of the market. Well, this is how these things trade. They're not like the minis. They don't go run, stop, reverse, run, stop, reverse, run, stop, reverse. And they're not like gold in the sense as gold goes like this. It breaks away, consolidates, breaks away, consolidates, breaks away, and consolidates. That's for a different thing. What bonds do is they go up, and then they pull back a little bit, and then they go up, and then they pull back a little bit, and then they go up, and then they pull back a little bit, and then they go up, and then they're done for the day, and then they'll either trade sideways or they'll pull back about half of what they did. That's just how they do things. Any questions on it so far? If not, I'm going to go to the next trade setup. I will open it up for questions here really quickly, just for a few seconds, because I'm ahead on time. I chucked a few slides so I could get through it for you. So that's the first trade. It's called an overnight bond trade. But 8, that would have been 16. Would you get stopped out? So here's how I get around that, Rob. So what I'll do is, if the average true range for a bond is 1 point, if I have moved 16 30 seconds, then I will focus on an 8-tick reversal. If I have moved more than 16 ticks, in other words, let's say I'm trading at 28 30 seconds on the day, then I'll use a 16-tick bounce. Got it? So if it's a half an average true range, it's probably only going to give me 8 ticks to get in there. If it's already close to a point, then I want it to pull back to 16 ticks. And it works both on the long and the short side. All right. So let's go to the next trade setup, which is called a sneak attack trade. And the sneak attack trade is an interesting trade, and I'm going to show you the picture too without the rules. So it's going to be kind of the same rules, okay? So kind of the same rules. On the setup, and I'm going to go to live charts here, and we're going to place this trade live. I don't have to be out of here until 9:30, is that correct? 9:30, all right, so awesome, I got plenty of time. So let's go through one more trade, and then I'm going to have time to where we can go through and I can show you what the markets are doing. Awesome, there's the timer. And then I'll actually place this trade in front of you, and if I get filled, great, and if not a big deal, I'll do it again. So in this trade, this is called the sneak attack trade. So same thing, you got to know what the daily overall trend for that market is. So are we all in agreement that the trend is in a down move in bonds in this example on PowerPoint? And then what I'll do is I'll switch over to live charts and we'll do some real analysis. So we're going to say it's going down. Here's what we're going to do. If we know the market is going down in a daily chart, do we want to go long or short? Which side do we want to focus on? If we know the daily is in a downward mode, all right? What we want to do is we want to focus on the short side. Now, you can focus on the long side. That just means you hate money. Is there anybody in here that hates money? If you've got a daily downtrend, why would you focus on the long side? It just makes no sense to me whatsoever. So here's the rules for this trade setup. Number one, you're gonna peg, or you're gonna bracket your chart, and at point one here, you're gonna start looking at 7:20 a.m. East Coast time, all the way till 8:20, and you really don't have to look at this thing until 8:20. Okay, at 8:20, you're gonna mark a bracket too. You're gonna try to find the high and the low, and when I say try, it's not that hard. So from 7:20, here's your low, and from 8:20, there's your high. Does everybody understand how I just did that? All I did is I said from 7:20 to 8:20, I'm going to bracket it, and I'm going to make, there's my low, here's my high. Has everybody got it? Super simple. Now, what we're going to do is we're going to say, since we're in a daily downtrend, we want to focus on the downside when it breaks out of that bracket. Okay? So what happens next is it breaks out of our upside bracket for a long signal. Do you take that? Yes or no? Oh, my green tea here is getting a little cold. Right. No, you don't take it. Why don't you take it? Why don't you take that trade? Because you like money, right? We're in this gig to make money, I think. I think that's why you all are here, right? You're not in here to make friends, right? I mean, it's great to have friends, but what you're in the markets to do is get in, get yours, and get out. All right. So what you're going to do is when it breaks the low of that 720 to 820 range right here, you want to short that. You want to place a short on, use a 5-tick stop loss, kind of a recurring theme here. Now your target is going to be your first hour range. What was that range? What you're going to do is from 720, your low was 145 and 21/30 seconds, and your high was 145 and 31/30 seconds. If you suck at math, don't worry. I think I got a D in math. So if I can do this, anybody can do it. So all you do is you can take out the 145 because that doesn't matter. The 32s don't matter. So it's 31 minus 21 equals what? Equals 10 ticks. So what's your target for the trade? You're risking 5 ticks. What's your target? The target is always your first hour range. That's all you do. So super simple. So we'll go over it one more time. It's not hard to follow, but let's do it one more time. So you start marking your bracket from 720 to 820. You mark your lows and you mark your highs. And then you go, okay, now I need it to break out to the downside because I've got it pegged as going lower. And you go, okay. And then you just go ahead and place your trade. You go, okay, if it goes below 145 and 21/30 seconds, then I'm going to short it at 145 and 30 seconds. And I'm going to use a 5-tick stop loss above that. And then since that's 10 ticks, my target is going to be 10 ticks below that. Why 720? It's magical. It has been mathematically proven to make $1 billion. It's just an hour before the bond market opens up. That's all it is, really. That's why we call it the sneak attack. It's before the pit traders get in there and start trading. It's just EST, Eastern Time Zone. Why 5 ticks? It's just the amount of risk that works out really good for a breakout trade in the bonds on the first hour breakout. So all this is the first hour breakout trade with minimal risk of 5 ticks. Now, you want this thing, here's the deal. You do have to have a little bit of rules associated with this. The one rule I forgot to tell you is if the first hour has to be 17 ticks or less. If it's 17 ticks or greater, you can't do the trade because the trade is already too wide for you to take advantage of how controlled bonds are. Okay? So 17 ticks or less in the first hour, you can do the trade. If it's 17 ticks or greater, the trade is invalid. Why not take the trade prior to hitting the target when you can clearly see it roll over? I don't understand, Bill Z. Ask it a little bit different way. I just don't understand it. Why not take the trade prior to hitting the target when you can clearly see it roll over? Oh, because it's set up to do a breakout trade at the first hour is why. All right, so I like building indicators, and I don't really build them. I have programmers that build them so that I don't have to do all this math. So in this case, you can see here's a long entry. Here's my stop. Right there's my long entry. Here's my stop, and there's my target. Here's my short entry, stop and short target. And I build them for various different platforms, so I just don't have to do it. And I'll show this on TradeStation here in just a second. Here's a long entry. Here's my stop. And then there's my target 1. So it just does all the math for me really easy, okay? So you got to have profits in order to have confidence, usually. And you got to have confidence in order to have profits. So number one things you need is really good money management. You got to have some really, really good entries. And you got to have some good exits. And that will increase both your profits and your confidence. So what we are going to do is we're going to go to live charts here in just a second. And I'm going to go through and place this trade. And we're going to do the analysis in real time, okay? So you got to have good setups, and you have to execute them really, really, really well. A decent setup will beat the pants out of a perfect setup that goes unexecuted all day long. So good is good enough. Don't try to filter out all the losers or the stop outs. That's a fool's game and for suckers only. Enjoy the process and walk through it. You're going to have some wins. You're going to have some losses. You got to be able to embrace both of those. All right. So I've got a special offer for you before we go to live charts. So this is just 2 of my favorite bond trades that I shared with you tonight. I have an entire online course that I sell for $197 that I'm going to allow you to have a 50% discount tonight, a special offer of $97. But it's only for the first 100 people, so I'm going to limit it to 100 people only, okay? You can call my office, area code 859-963-3445. Don't go anywhere yet. This is a special offer, but I'm still going to sit here and answer your questions in just a second. And the link to go to here, I will post it in here for you to have. You can go to, if I can figure out how to copy a link, that'd be amazing. There you go. Morgan's got it for us. So it's hubertcenters.com/up. And let me show you what's going to be in that course. So this course is called My Favorite Trades, okay? So My Favorite Trades will give you access to, this is what's going to happen when you go to that link. And all you have to do is hit add to cart. You'll see my ugly mug right there on the thing. And then it's a 7-part video series. Part 1, Part 2, Part 3, Part 4, Part 5, Part 6, and Part 7. Each part of this is about an hour long, okay? How much do you need to have an effective account? I mean, you got to have at least $5,000 to do it. And then I also have a video of live trading, and then I have hours of live trading on another CD. Now, the one thing that I didn't tell you is actually I have an Ichimoku course, Cloud Charting Secrets. That is the bonus that's included in there. I'm actually separating them out this year. This will be the last time they'll be sold together. All right. So actually, you're getting 2 courses for the price of 1. Okay. So it's Cloud Charting Secrets. Ichimoku Cloud Charting Secrets is included in there, but I'm taking it away after tonight just because I accidentally kept it on there. Okay. So that'll be your last bonus there. Hubert, can you explore trading silver and golds? Yeah. So all of my products and services come with 100% satisfaction guarantee, no questions asked. If you don't love it, you don't have to keep it. I'll give you all your money back. That's just how I do things. So let me go through what's covered in the course, and then we can do some live trading and some Q&A. So these are the different modules. So module 1, I'm going to teach you my favorite trades in swing trades and day trades and stocks. Module 2 is also swing trades and day trades in stocks. Module 3 covers all the E-mini trades. And then we go through gold swing trades and day trades. And then bond trades. I've already taught you 2 of my favorites. And then, like I said, I have an Ichimoku Cloud Charting Secrets. It's a really good course that I teach on Ichimoku. I'm a huge proponent of Ichimoku. And you can call the office if you're interested in ordering, or you can order online. So this is what all the course goes through. In the first module, I talk about my favorite way to scan the markets for swing trades, best way to scan the markets for day trades, and how to filter out the best trades to take. Okay. And let's take a look here at Module 2. Module 2, I show you the 7 horseman trades, where there are 7 stocks that beat earnings 90% of the time. I show you those 7. And then there's 7 stocks 80% of the time. I show you those 7 trades. So that's really powerful if you trade stocks. And then we talk about stock gap plays, on how to trade gaps when they gap up or down against you, and how to trade those for profits. And then we also talk about the gap and go, and we talk about the gap and crap strategy. That's in stocks. All right. In Module 3, how to trade gaps on index futures. I've been trading index futures forever. I have a seat on the Chicago Board of Trade. Usually I trade more Dow futures, and I'm really active in that market. I teach you the ambush trade, also go through the 85, 115 fade trade, and the crescendo trade. The crescendo trade setup's a really cool setup. It's kind of like having tomorrow's newspaper today, and it's a really cool setup. So that's Module 3. This says Module 3, and it actually should be Module 4. Typo on my part. I go through my famous good night gold trade where I teach you how to risk $600 to potentially make $6,000. And this is really a good trade, the exact same way that you risk 156 to make 1,000. This one you risk 600 to make 6,000. There's also the gold rush trade, and there's the gold bug trade. All right. I personally like your stuff with the gold trades. Thanks, Dave. I appreciate it. So now this can go either horribly bad for me or really, really good for me. So these are the two trades that I taught you tonight: the overnight bond trade and the sneak attack trade. Okay. How long do we have access to the videos? Until you die, Steve, or until I die? I'm only selling 100 tickets to this course, though, okay? It's a pre-recorded course. As soon as you hit the Buy Now button, you'll have access to it, okay? You have access to them as long as you live or as long as I live. So, and then also, there's an Ichimoku course at the bottom of that I'll be taking out later. You guys will still have access to it, but it's the #1 selling Ichimoku course in the world. I've sold more of them than anybody out there. It's a really good course. So here's the deal. Here's the link. If you want to get you one. I can hear the phone ringing in the background. It's only for 100 people. I'm not going to sell 100 and then 100 and then 100 more. It's only for the first 100. Once there's 100 people, it's done, okay? My team is right behind me taking orders. I can hear the phone ringing, and I can hear him talking on the phone. So go to hubertcenters.com/up. Now, I've done this before. Has anybody in here bought this course? And what do you think about it? Did you like it? Did you not like it? Good course, bad course? I'm sure there's people in here that have already taken it. I would love to know your feedback. Did you like it? Did you not like it? So obviously cannot log in to 652 people and be all 652. So if you have taken the course, let me know, what you thought about it. So thank you. Appreciate it, Gary. Lost the login. Cliff, call the office. We'll give you a new login. Not a problem whatsoever. So, yeah, love it. Yes, great stuff. Like your gold stuff. So thank you. I really appreciate it. Liked it a lot, especially your Ichimoku. Cliff, not a problem. Glad to do it. So let's go into some live bond tradings. One of the best I've ever tried before. Oh, thanks. All of your courses are good. Bought it, was great, but I had to buy the Ichimoku course separate. Yeah, Jan, call office. We'll hook you up on something. Great, Thanks. All right, so appreciate it. So let's take a look at the bond market really quick, all right? So first thing, we want to look at the daily bond market. What is this thing in? Is it in an uptrend or a downtrend right now? What do you think? I would say it's a downtrend. We're below the Ichimoku cloud. Do you see it? It's below the Ichimoku cloud. That means it's in a downtrend. Can you explain the ticks and how they are priced? So the ticks on bonds, they move in 1/32nd, and it's worth $31.25. It's just random. The exchange prices all that crap, and they price it in. So they actually set all that stuff. So we're going to say that the bond market is in a daily trend. Does everybody agree with that? Now, it's trading sideways. Here's the thing. When the bond market breaks down below 127, it's going to get annihilated. So you want to stay short, and get short some more. Can you explain the ticks? Sorry, I got that. Judy, call the office or email us. So what we're going to do is we want to short the bond market. It's in a daily downtrend. So what we want to do is we're going to go over here to the Trade It tab. And then let's do this right here. Let me do the 8 tick or 12 tick. So I've got an indicator built for this that I just do and makes my life easier. So what I want to do is, since we're in a down mode, where would I want to short the bond market at? I'll do it manually first for you. Daggone phone's ringing off the hook. At 129 and 4/32, I want to short it 8 ticks up. So 4 plus 8 is what? What is that? Based on 4 plus 8 is what? It's 12, right? Is that right? Kentucky math's a little rusty. So let's go right click, new parallel line. So it should be right there. Is that right? So I want to short the bonds when they bounce up to 129 and 12/32. Does that make sense rule wise? I think they're in a downtrend. I think they're going to go lower. This is the 6 o'clock open. They put in a new low. Now that since they put in a new low, I want them to retrace up. And at 129, 12/32, I want to short them. So I'm going to shrink this down. I'm going to go over to my live trade application. And I'm going to go, it should be, what I say, 129. Tell me the number. What about the 17 tick? The 18 tick or the 16 ticks? Well, the 8 one's good for me now because it's only used, so it's at 12 right here. So I should go pink. Now, if you don't have a chart, you can always cheat. You can go, okay, 4. You can go 1, 2, 3, 4, 5, 6, 7, 8. And then I can go boom. Now, in TradeStation, here's how I've got this order set up, okay? So this is a live order. The market's going to have to go up here to 129 and 12/30 seconds. Notice I'm risking 5 ticks from my entry, 129 and 12/30 seconds. So I'm going to risk tick 5 ticks. How many ticks am I trying to make right over here? So I'm risking 5 to make 32. Why do you think this trade works so well? What component am I taking out of the market? Which is the thing that'll mess you up 90% of the time. Exactly, because you'll be sleeping when this order gets filled. And if it gets filled, great. If I get stopped out, it's only 5 ticks. It takes all the emotion out. I'll be in the bed and I'll wake up. I'll wake up and go, oh, I didn't get filled. Oh, that sucks. Okay, I'll do another trade. Or I'll be filled and be like, oh, God, I got filled. Oh, I got stopped out too. Or this will happen. I'll wake up and I'm like, oh, I got filled. Awesome. Oh, it's very close to my $1,000 target. Now I have a tough decision. Do I peel it off while it's up $800 or do I wait until it hits 1,000? That's the reason this thing works, because it takes the biggest part of failure in trading out of it, which is you and your emotions, right? Now, the cool thing about trading is they don't call it trading for nothing, right? Same way they don't call fishing catching, and they don't call killing or hunting killing, right? It just all depends. Like sometimes they're going to work, sometimes they're not going to work. So that's the first bond trade. So any question on why I did what I did? I taught you the trade, and I actually did the trade in front of you. So we'll wait. Hopefully, I'll get filled, and if I do, awesome. And if not, no big deal. So let's talk about that other trade we were talking about, that sneak attack trade. So we had that thing pegged as going lower, right, today. And in today's action, you could see that we would have a short entry. This is the sneak attack trade, but we wouldn't do it because we didn't get a short entry. See the purple line here? I never really got a breakout down below that, okay? But if I would have, on the sneak attack, I could have shorted it at 128 and 25/30 seconds this morning, but it never got down there. And I didn't want to take the long because, for me, the bonds are not a long right now. They're a short only, okay? So let me open it up to questions. You can ask me anything you want to know about what I just taught you. And then a fun thing that I like to do, since we got a little bit of time here, if you want to throw out whatever market that you trade, and if I trade it, I'll tell you I trade, and if I don't, I don't, then I will tell you what I think it's going to do, okay? So I'm going to remove the parabolic SAR here really quickly. And then if you've got, now just don't kill me, all right? Status. And then, all right, let me give you, all right, so that's a lot. So gold at GC. So gold on the Ichimoku is a short as soon as it'll break back 12.12. Overall, gold is sideways to slightly higher. It is below the cloud. If it breaks 12.47, it'll go higher. If it breaks 12.12, it'll go lower. XOM. So in the course, I'll be teaching you also, as the last chance bonus, the Ichimoku, which is how to read these magical lines. ExxonMobil looks really good. It needs to get back above $100. The only problem with ExxonMobil is look at crude. I mean, crude oil is getting smoked. So if you're a member of HSIC, which is our membership site, we've had people short crude right here, and we've been covering down here in this zone because in the videos at night, I've been going, all right, shorted here, cover it some more, now be careful. So, yeah, Hubert, does the offer include? It will. I'll include the Ichimoku videos for you if you want me to. They're already included. I meant to take it off because at the first of the year I was going to separate the courses, but it's still in there. So in that course, I actually sell for $197 too. So you'll get access to both of them for $97 if you want to take advantage of the offer. But after you guys buy it, I'm actually going to separate the courses. So I won't sell this course again with Ichimoku as a bonus. Yeah. LNKD. So I've got 15 more minutes, and we're just going to go through some analysis. Now, we'll show you, like, in the Ichimoku course, let me show you what this is like. Does anybody have any education on Ichimoku? You guys know even what it is? I mean, I know Andrew is in here really good. Andrew's got a really good course, too. Hubert, could I have your email address? It's support@hubertcenters.com. So, no, silver makes me itchy. Andrew taught me. Andrew's got a really good course. Tesla, TSLA, and me and Andrew are big buddies, so we're good friends. He's got a really good course. We're both huge fans of Ichimoku, so it's really good. Tesla here is a solid short until it gets above 160. It's a short. It's running its head into resistance, okay? ES is just a long. It just is. The ES on a daily continues to be a really good long here. It's above its turning line. It's hanging up here at 1834. It looks really, really good. Twitter, TWTR, little hard on Ichimoku because it doesn't have TWTR. On Twitter, it really doesn't have enough stuff to go on. So, I mean, I could give you a 60-minute signal, which is the next best thing on Twitter. On Twitter here, it is a short. Since it's below the cloud and it's below the lagging line, that means it's going to be 4 days down. So day 1, day 2, day 3, you got one more down day on Twitter. CRM. So CRM here, you're taking a look. Let me back off to the daily so I can show you what it's really going to do. CRM looks good. It's crossed above the cloud. It's just bouncing again, and the lagging line looks really good. It's probably going to go to 60. RAX, hopefully RAX goes up. I'm actually long RAX, but for a different reason. RAX looks okay. If it goes below 34.99, it's going to be in trouble. I would love to see RAX go to 42.41. I'm in that as a January effect stock. It's not working out great for us, but it's working out okay on a bunch of other stuff. BBY. In the videos, you've seen me talk about BBY. 1, 2, 3 days below the cloud, and this lagging line starting to cross over. BBY is going to get annihilated. It's going to go to 35 to 36. I mean, 35 to 30. So it's going to go a lot lower. SLV is going to be the same thing as gold. SLV and gold are going to track really similar. It's a short. It's below the cloud. It's probably going to go below 18. Boeing, BA. BA looks really good. Smoking hot trade here. So it's bouncing off the cloud. It's going higher. It's got good support. It's going to go north of 150. Looks really, really good. Amazon, full disclosure, I'm long Amazon from $75. Amazon looks phenomenal at 401. It's holding above the turning line and the standard line, nowhere near the cloud. Looks like it could probably hit 450. eBay, E-B-A-Y. I already did. eBay. eBay, no advantage. It's a chop fest. Stay away from it. It's just ugly. I can't even read the chart, so just stay away from it. BBRY. BBRY. Ooh, BBRY. It helps if I can type. BBRY. There you go. All right, so BBRY is a very nice. We're actually long this one in January effect. It's perfect storm. We've been long from $7.29 with a stop of $6.38. We've already taken half of our profits. It's just crossing above the cloud, and the lagging line looks like it's going to go above the cloud. Target on it could be north of $10. Apple, AAPL. So Apple looks really good. It's bouncing down here on support. I would get long if it goes above 547 and use a stop of 533. LNG. LNG looks good. It's above the cloud, above the turning line, above the standard line. Target's going to be $50. HAD. I don't even know what that HAD is. FIB? FIB? I don't know what that is either. TASR? TASR. All right, Taser looks good. It's bouncing. Notice how, you see how the cloud just bounces things off like a little mini trampoline, like boing? Really good. Probably going to go to $20. MSFT. If I'm not reading your stocks, I've already did Twitter. Twitter looks a little bit lower. Microsoft looks like it's going to break through the cloud. If you get 3 days below the cloud and the lagging line below, then Microsoft will probably go to 32, but it hasn't done it yet. TGT. Target, TGT. Target is a short. It's below the cloud. The lagging line is below. It's probably going to go below $62. GMCR. If I typed the symbol wrong, sorry, guys, I'm dyslexic. Awesome trade here. Look, this is a really good setup. Look, GMRC is above the cloud just for a half a dozen days or so. The lagging line is above. It's got some serious resistance at 90. That's where it's going to go. $90. CREE, C-R-E-E. We're actually in CREE in the newsletter. CREE, we've been long. It's a January effect stock too. We've been long from 61.32. We told everybody to sell half their profits today. Looks really good. It's crossing the cloud, and the lagging line looks like it's going to cross too. CREE's probably going to go north of $70. GMRC was upgraded. Okay. WFM. WFM is a solid, massive short. Notice it got below the cloud, banged its head on the cloud, and now it's going lower. It's going to go below $52. Be careful with that thing. It's nasty. All right. So like I said, I've got just a few more minutes here. If you're interested in buying my favorite trades, go to hubertcenters.com/up. You can also call my office. My team is standing behind me right now talking to people on the phone. You go, what trading platform are you using? I use TradeStation, Infinity, and Toss. What does your trade room cost? I have a trading. This indicator work on NinjaTrader. Yeah, I think there's an after hours, or there's a third party that has Ichimoku on NinjaTrader. Yeah. Thanks, Hubert. Could you please name one honest forex broker that does one exist? FXCM and Gain are the two biggest players in town, and now that it's regulated, those guys kind of have to be honest. So you're probably okay with one of the big guys. Cloud for Ninja, go to Ninja Forum. There you go. What is your take on ICPT? Gain Capital, Forex.com, or FXCM? I would stay with one of the biggies. Does Cloud work on Interactive Brokers? Interactive Brokers is a good trading platform, but they got sucky charts. I mean, they just don't have a real good chart platform. Interactive Brokers doesn't, unfortunately. What time frame are you using for the Ichimoku Cloud? It depends on what I'm trading, but I will show you. Let me find a thing here, which is really cool. So I'm going to find one of the. So this is a cheat sheet for one of the classes. Let me go down here. All right. So this is some of the educational material on the Ichimoku course. So I'm going to go down here to a cheat sheet. This is the time cheat sheet. So it's going to, I'm flipping through it real quick. Let me just get to where I need to get, and I'll show you. It depends on your time frame, what you're trying to do. All right. Thank you for your junior. Oh, you're welcome. Glad to do it. Where's my cheat sheet at? So on Ichimoku, it's been profitable out of 430 stocks out of 500, 86%. If you know how to trade Ichimoku, you can get a return of 33% to a 79% return. This over the past 5 years. Now, there's also, it's been profitable on 29 currency pairs over the past 10 years, which is amazing. So here's the cheat sheet time frame I was talking to you about. And you get this with the course too. So in this example here, you can see if you're looking at a daily time frame, then you're going to be in that trade. That signal's good for a month. If you're looking at a 60-minute time frame, then that signal is going to be good for 3 days. So in other words, if we get a short signal, we know we can stay short for about 3 to 5 days. If we're going to day trade on a 5 or a 10-minute chart, then that direction should be good for 2 to 4 hours. Does that make sense? So first you got to figure out how long you're going to stay in this trade, and then you back into what time frame that you're going to look into. Oh, yeah, all Forex brokers take the other side, yeah. How do you trade the NASDAQ, YMCL, ES, US? I trade all of those, and the course teaches you how I trade most of those, FH. Yeah, you're very welcome. What does your trade room cost? $97 a month. So I have one membership price. It's $97 a month for trading videos, trade alerts, and a live trading room. It's $97. Is that lag the cheat sheet? I don't know what that means. Hubert, have you used the cloud to trade binary options on Nadex? I have not. Not yet. I have not. IPC. All right. So let me see. Somebody's asking ICP. Let me get this one out of here. You discard that, and then I'll get you back here to the slide for the link. Morgan's got the link up there for you. I can hear the office phone ringing like a crazy. What is your stock? Is it ICPT? ICPT. I wouldn't touch it. I mean, it looks like it's a buyout deal. I wouldn't touch it. It says it's a long, but I mean, it's gapped from basically $50-$60 up to $275. I just wouldn't touch it. Hubert, the offer for 97 in the video course or the live webinar. It's a video course. It's a video course. Awesome is the session tape. Yeah, Morgan records all of his sessions. So I got 4.5 more minutes. 4 minutes and 23 seconds. So if we take the $97 membership, would we get the current offer you have here? Well, you have to buy this offer in order to get a trial to the membership. So yes, you could. The membership doesn't come with the course, but if you buy the course, I'll give you 30 days to the membership course. AUSUSD. Okay, Aussie USD. AUD USD. That is a lower smoke and trade. That's a solid short. Shorted here. Use a stop of 89.92. It's probably going to break down through this most recent resistance or support, I should say. LNKD. I thought I already did that one. LNKD is a short. I love that stock too. It's below the cloud. The lagging loan's below the cloud. It's probably going to go back below $200. DDD. DDD is going to be a massive long. You can see where it bounced down here on the cloud and has just went ballistic ever since. So Ichimoku is a great way to trade, and it's one of my favorite strategies. I also know Andrew was in earlier too, and he talked about it a lot. We're both huge proponents of that Ichimoku course. It's great courses. LinkedIn was downgraded. I don't really care about upgrades or downgrades. Those guys are morons. Just to be honest with you, I mean, they're just moving their inventory up or down, and so HLF upgrades and downgrades mean nothing to me. Technicals is what really drives my boat. HLF looks really good. It's above the cloud, above the lagging line, and the standard line looks good. Probably going to go to $90. Yeah, they always grade after the fact, right? When do you use SAR with Ichimoku? So one of the best stops to use with Ichimoku is parabolic SAR, and what it'll do is it'll tell you where to trail your stop to, and I cover that in the course, in the bonus course. But like I said, I'm going to be removing that course after you guys purchase your 100 tickets. Those two courses are never going to be coupled together again. I'm going to separate them because it's a huge value. 2 courses for the price of 1. Can you call the office for pricing on the bond indicator? Are you? We are here to help you. Yeah, you can. Yeah, you can just call. That's Susanna right behind me. If you want an indicator for bonds, she'll take care of you. How about MCP? It's a stay away because it went into the cloud and it's coming back. It's a short, but it's a short with conditions of you just got to stay away from Molycorp a little bit. It's a little confused right now. It's not a perfect setup. I would just stay away until it decides, is it going to go above 6 or is it going to go below 480? Yep. When the course starts, it's all pre-recorded. It's already recorded. You don't have to wait for anything. It's pre-recorded, and you can just start watching it as soon as you buy it. Is the lagging line and the standard line what make up the cheat sheet? No. It's just the cheat sheet is made up of what time frame, how long you're going to be in this trade, and then you go, okay, I want to be in this trade for 3 hours. Okay, look at a 60-minute chart. Or I want to be in this trade for 3 days. Fine, look at a 60-minute chart if you want to be in the trade for 3 days. IBM's going to look really... IBM is just a brand new long. Look at here. You've got 1, 2, 3 days above the cloud. The lagging line is up. IBM looks good. It's going to go back to about 195. ODP. Got 51 seconds. ODP. Less than 45 seconds now. ODP. Fresh short. Hey, that looks good. Office Depot. That's a really good find. It's below $5. I hate trading stuff below $5. But, you know, stuff that's $5 or below usually goes to 0. That's a good, solid sell signal. Facebook, FB. Facebook is a solid long, probably going to go to 65.50. It's above the cloud. It bounces when it hits it, so it looks really, really good. Guys, I'm out of here. I got 20 seconds. The link is in front of you. Let me give you the office number one more time here so you'll have it, and then I'm going to take off. Here it is. Morgan, thank you. First 100 people, area code 859-963-3445. Area code 859-963-3445. Guys, thanks for having me. I really appreciate it. Hope you got some value out of it. Hope you take the course. Like I said, 100% money back guarantee. Good luck. Hope it helps, and I'll see you on the next webinar.
All right, great. Thank you, Hubert. We appreciate you being here as always, and hope you have a wonderful evening. Again, the link, guys, is hubertcenters.com/up. I can tell you we've hosted Hubert, probably approaching double digits now. We've never received one complaint about him or anybody that took him up on his videos. So I can tell you that definitely we have a lot of people on these events, and the feedback's always really good. So I hope that you guys enjoy it. Like he said, if you had some type of trouble on the site, you can give him a call at that number. But it's hubertcenters.com/up. So thanks again, Hubert. Hope you have a wonderful night up there. And guys, what we're going to do now, we're going to do a quick 2-minute break. And yeah, very, very cool, David. I appreciate that. You guys are in for a treat with a little bit of options trading education coming up. So Hubert just talked to you about some futures trading and looked at some stock setups. And now we're going to have Peter Schultz come in from the Pacific Northwest. Isn't that right, Peter? To educate us about some options trading. So we are recording the event. We will email you guys that missed the earlier sessions copies of that. Most likely we'll have it up tomorrow, and shoot it out to you. But give us about 2 minutes here, and we'll have Peter's slides loaded and let him take